Good evening, everybody. My name is Nick Groves, your host here with Trading Analytics, and today we're going to dive into what happened in the markets. Today we saw equities fall pretty much across the board, but all S&P, Nasdaq, and Dow. And I have a couple different charts to show you on the S&P here first. First is the S&P ES E-mini futures. I'm viewing this chart as a rising wedge. Now, a rising wedge is technically a bearish development, and today we did actually break down from that rising wedge support here at 52.63. We've had a slight bounce back up into this range, and what's interesting is that it actually coincides with this channel resistance. This channel we broke out of on Wednesday, the 27th of March, and we just broke back down below pretty much right before the open. And it looks like this could potentially hold, but we're on some pretty massive support, and I'll show you guys that in this chart here. This is SPX cash. Now, I've been talking about it for, since we broke out here. This is the breakout from the Fed. So last time we've seen this level, that 5190, 5200 it should act as support. It's also channel support of this massive channel that we've been in since the start of the year. Now, we saw a massive move in yields today, and yields are the big topic of conversation and what the Fed's going to be doing. So you really want to be paying attention to yields. They did actually come up really quick to show you this and tagged the 50% retracement here. This is stretching from October of 2023 to December of 2023. So we finally came up and tagged that. Will it hold or not? I'm not entirely sure, but if in the event we continue to squeeze back up here in equities, because this is the dip buying level, the first one, I would not be surprised to see us get back up towards 52.28 or so. That would fill this gap that we saw, and we saw, typically gaps get filled, right? And I don't always love them, especially when I'm short, because I feel like it's just naturally going to gravitate right back towards it. And we kind of saw this coming yesterday. The Dow Jones Industrial Cash actually put in a evening star. It's also a double top, but this evening star was placed right here on the 8-hour and the daily. So that was a little bit of a signal. We have the double top in the Dow, double top in the Nasdaq. That's a messy one. Let me just show you the triple Qs. Double top here, and then there's some other double tops out there. But basically, we're kind of, at least data-wise, we are technically due for a pullback. We could be getting it, but you just want to be careful if you're layering into shorts that, retail's been relentless. This market's been relentless. You don't want to be caught wrong-footed, especially ahead of NFP on Friday. So let me dive in a little bit into tech, the Nasdaq. The Nasdaq today also came up to channel support, and it broke down from this descending channel. So we had a breakout of the channel, breakdown of the channel, back test, and ultimately led to a breakdown. We're chopping around in here. We do have channel support now, probably by the time you get there, at 18,277. We have descending channel support now, and we have the overall large channel support as well. We did bounce, but we've bounced to a 38.2% retracement, or at least very close to it. Typically, if you see a move that's going to continue, it likely stalls at the 38.2 fib. So just be aware of that. And also, along with the Dow is also at channel support. So we're at support in all the major indices. How we react from here is going to be huge. And speaking of huge, volatility, it's back. We're back above this channel support that we actually broke down from the other week, which was depressing because who doesn't like a little volatility, right? But it looks like it's back and it could continue up higher. So just be careful, especially with that big event on Friday. Let me show you all a little bit of the big tech here. Tesla opened up down, I think, 6% at one point. And we were talking last week about the potential for an inverse head and shoulder pattern. Well, that got negated yesterday. And now we're viewing this as a bearish wedge. Now, I think we're likely to get down somewhere in the 140s, and that would also coincide with this gap here that we had back in January of 2023. So here's a potential trade setup for you. If we get down here and test support and then break back above this this wedge support and 160 support. You know, you can take the long, stop at the lows. It's relatively straightforward. I would also like to address NVIDIA here. NVIDIA is still sitting in this range. We know that resistance is going to be 920. Above there is the all-time highs. Above there, for me, is going to be 1055, 1056. I think if we get back up near 1,000, we're going to blow straight through it. That's just my opinion. And if we break down from here at 851, I think we're likely to come back and test this gap that we created at the beginning of March. Let's see what else I got for you guys. Microsoft did actually break the lows of last week earlier and then retraced. It's just at the moment kind of hovering within this formation here. I still have support at 415 and resistance going to be up at 431. Outside of that, Facebook was the strongest of all of the big tech stocks today. It had a little bit of a false breakdown of this channel here. We're getting back near the 500 level, which I do think is, well, it acted as support yesterday. We could stretch back above it, call it maybe 502 or so. We seem to have gotten some action here before, horizontally speaking. I also know that's where the two executives of Meta dumped their stock, is up around here last week. So that's important to be aware of. And with that, I think that's all we got. It's quick today, guys. We got a moving market, and it's time to be on top of it. So I just want to put this out for you all, and I will see you all shortly. Thanks.